How much, when we talk about the strategy of the bank, how much have you given up in terms of decreasing the Deutsche Bank's dependence on the investment bank in terms of revenue?
I'm actually very proud what we delivered in the stable businesses. Everybody knows that because of COVID and the further headwind from the interest rates, that was an even more difficult year than we planned last year at the same time at the first Investor Day. And we have performed very well. We are in line with our plan on the revenue side, on the cost side. So we have really delivered, and that shows that the underlying growth in the stable business is strong, is resilient, and gives us the confidence for the coming years. In the investment bank, there is a clear outperformance, and we have underestimated the potential of the investment bank when we came up with the strategy last year in July. We performed very well in those businesses where we decided to be strong, where we decided to stay in the business. We have re-engaged with clients. The halo impact from exiting the equities business far less than we anticipated. And in this regard, and Mark and Ram will show that later today, the sustainability of the revenues in the investment bank is very strong. And hence, we are happy with the performance, but that does not change the strategy at all.
Okay. If we talk about, as you said, the outperformance of the securities unit, you've in late October, you've increased the revenue outlook to significantly higher. If we talk about the fixed income trading business, in the fourth quarter, has the good momentum continued, and could we even see double-digit growth in the fourth quarter once again?
Well, let's see. We still have a month to go, but I would say that the momentum in October and November was very satisfying to us. We have seen continuing good momentum in the investment bank. But again, you know, a year is over when 12 months are done, so we have to go through the December. But for the time being, I'm satisfied with the performance.
Okay, so overall, it could be another very good quarter for the trading business.
You know, we are always trying to get better, and that means that of course it is our goal to be ahead of last year. And again, in October and November, we have seen a good momentum, and now we have, including today, 22 days to go, and that's what we are doing.
Okay. And are we nearing the peak of the trading boom that we've seen? And what does it mean for revenues in the investment bank in 2021 and 2022?
Look, there is it is clear that some of the outperformance which we have seen has been COVID-related and has been market-induced. There is no doubt. But I'm really proud of the fact that in those businesses where we made changes last year in fixed income, but also in the financing business, where we focused on, where we said this is the strength of Deutsche Bank. When you look at the financing demands, it will be a global trend that there is more financing demand. Deutsche Bank is a powerhouse in financing. We clearly outperformed, and that's what I meant when Ram and Mark will present later today. They will show you in detail what kind of revenue stream is sustainable. And in this regard, I do believe that a good part of the outperformance which we have seen in 2020 is sustainable. And hence, we are confident also for the investment bank in the year 21 and 22, though acknowledging that some of the outperformance was clearly driven by the markets in 2020.
If we look at the corporate bank and the private bank, obviously there's an impact by the pandemic and also the continuously low interest rates. So how much more pessimistic are you about those two areas compared to 2 years ago when you started thinking about the strategy of Deutsche Bank?
Well, first of all, I think both have shown how resilient and strong they are in their markets. They have done everything to mitigate the additional headwind in particular from the interest rate environment. The corporate bank has now charged and passed on negative interest rate to more than 70 billion of deposits. That is far more than we anticipated last year. And that makes us confident that the underlying growth, which we have seen in 2020, if we continue to do that in 21 and 22, we will achieve our revenue targets for both units. And further on, the headwinds from the interest rate will actually soften in 21 and 22 and in the following year.